All right, welcome to 90 minutes trading training with Felix. And this is just basic support and resistance, price action trading strategy, right? Support resistance and price action trading strategy. And of course, we said keep 5 fingers on watch list. If you're a beginner, 3, it's okay for you. And for me, I just give an example. Gold can be traded any season. Of course, I can trade it any season. So you may want to pick gold as your scalping agent, right? Can pick gold as your scalping agent. There's NAS 100, NAS 30, US 30, oil BTC. So you can pick gold or BTC as your scalping agent. In currency, you have Euro USD, GBP USD. So this is GU, AU, AUD USD, right? USD CHF, Euro SND, and then GJ, that's GBP JPY. Of course, there is this other one too can be good for you, UJ, if you want to add. Now, setup model fundamentals. So, investing.com, Forex Factory, currency, strength index, meta are very important. Daily bias on key levels, price actions, and all like. Then we have 4 hours, 1 hour market trend, demand and supply, premium and discount with Fibonacci retracement. So, those are the things you want to do pre market and then filter out other things and all of that. Now, so we have 15 minutes or 5 minute internal structure and liquidity. So you want to identify liquidity area in all of those regions. Of course, you identify external liquidity, but internal liquidity of those that swing low and swing high at your target point for taking profits. Take note. Take note. The routine is this. If you must scalp, so the routine is this. So if it's scalping, now if it's scalping you are doing, all you need to just let me get the bias, and you can get bias of the market anytime, any day, right? To just tell the structure. All right. So if you are scalping on, if you are doing day trading and scalping, or day trading on 5 minutes, of course that's day trading. So 5 minutes day trading. So you probably want to go to 1 hour and straight down to 5 minutes. And then if it's intraday trading, 4 hours to 15 minutes, right? And then if it's scalping, 5 minutes, right? 15 minutes to 1 minute, and all of that. Confluences, market structure shifts, support and resistance, MACD, MA cross, all of those are confluences you must check. So your daily trading routines. So first, you have to, there's something I need to show you here on this tie, your trading. So what's your daily target? It's very, very important. So you are trading, you need to expose how much am I going to be trading with. All right. So that's the setup here, for instance. So saying daily target 2.5, whatever. So risk, so you have to look at it. How much am I trading with? Okay, you are trading with $500. So let's say you are targeting to make 10 to 10 to 10 to 5, 5 to 10 to $20 a day, right? If you trade like 20 times in a month, so 20 or 10 times 20, 20 times 10. So we're just using conservatively, that's $200. So you want to target to make $200 on your $500 in a month. That means you need to do average of $10 to $20, on your trading. And that means you have target to do how many trading in a month? 20 trade. Now, all of this, I'm not going to have time to do detail of that, but these are your trading plan. Okay, so your trading plan is very, very important. You need to work out your trading plan. What's my trading plan? And that's very, very essential for you to achieve your activities. Do you get it? So you must work out those strategies to get and so your trading plan is very important. So all of those things. So I'm not going to have time to more detail of this. So if you want to get more detail of this, I think the PDF is available. You can sit down. Now, another thing you must pay attention, maybe you want to trade all sessions. So you can target to take a trade in Asia section, London section, and New York section. Okay. So you want to trade just one trade. So you can do that. And so if you don't have all the time, and then you can also, okay, I want to trade London session, define it practically, right? And which, I've just make all of this available that, pairs that are more fantastic in a particular session. So let's quickly go into the trading. Oh, I actually see I was going to exit this guy. And just exit this guy. Really was busy. Oh, after much profits. Okay, no problem. All right, so now let's go. Your first assignment. Now, your trading plan, you have planned yourself. And what is your trading strategy? What is your trading plan? I've told you what trading plan is all about. Of course, if you have not gone through our training on trading plan, talk about market analysis and trading plan. I think is here. Price action, support and resistance trading strategy. Right? So you will need to have understanding of this. We'll talk about analysis, right? So we'll talk about what? Analysis. So price actions and its component. You need to understand price action and component, and then analysis and trading plan. Okay? Analysis and trading plan. So they're very important. So analysis involves the process of this and that, yada yada yada. Right? And then why plan, right? So we'll talk about second analysis and trading plan. They're very important. I think let me just give a caption over here. Okay, yeah, this is already here. Good, make a lot of sense. Okay, make a lot of sense. Yeah, so maybe just for you to know. Aha, good. Okay, right. Okay, so let's go. So first thing we say we need to do, of course, we need to go to fundamental. And one of the first fundamental area is your forest factory. Now, this recording is done the month of March, exactly 30th, 31st of March, end of the month. Now, of course, end of the month, beginning of the month, to have factors you need to put in place. All right, so now let's go. So this is March 31st. Now, we will need to check, are there fundamental news available for the first? Now, actually on that has to relate with US dollar. There is none. Okay, that means no problem. But you need to know that market is coming to a close for the month. And so you expect some rebalancing of the market and all of that. Now, the beginning of the month, it happens to be Wednesday or Tuesday, sorry. And then you look at it, what is the update? So we have, manufacturing, PMI, job opening, and all of that. So then on Thursday, I think it's okay, non-farm payroll, which is Wednesday, is a very powerful news. I think I have a PDF I've done about most 8 to 9 top important news that you must not play with that have a lot of effect on the market and all of that. On Thursday, unemployment claims. So the first week of the month is actually very crucial. And so you want to look at, so first day, as we come first in the day you want to start trading is to check that. The next you want to check is the currency strength index, right? Currency strength index. So sometimes this is a sentimental kind of approach to look at. So you can see this guy was strong at a point, now it's weakened. That means market against it, like JPY, GBP, and then USD, AUD, USD. Now you see that AUD, USD, what will be happening to be selling massively. Okay, so if you have done all of those fundamental check, now you are going to go to your chart. And you have told yourself, what's your trading plan? So you go to your chart. Like I said, if you go to AUD, USD, let's just use that as an experiment right now. AUD, USD now. AUD, USD, or do you not have that here? AUD, this is AUD JPY, so it's still selling. So AUD USD, perhaps we do not have it here, so let me just add it. AUD USD, so AUD USD, so AUD USD is added, so perhaps take it up. So take it up. Okay, so here is AUD USD. You can see that AUD USD have been selling, because if you come, as you come for the day, you saw the sentiment. I've already given you an idea, but that's not a factor though. But it's one of those things that you're using, sentimental approach, the fundamental, sentimental, and technical. So everything you get on your fundamental and sentimental, you want to now, test it to see the validity, just like research work. Now, so let's use this one as an example. So you have told yourself, now, in coming into the market, you now have 5 instruments or 3 instruments you actually want to trade. But of course, why I have to stratify most of those instruments that make more sense. If it's Asia session you come to trade, you can see which of the instruments are much important to look at, right? So I've told you here, look at it. We look at, okay, I think it's in somewhere here or another place. All right, there on the 90. Okay, let's look at it. All right, so let's look at, we say Asia section. Best pairs to trade in the Asia session, Tokyo. It which 1 a.m. to 10 a.m. Nigerian time, West African time. Look at them. So, well, do we list it? I think I listed them. Lower volatility compared to other sections. So, with currency pairs involving the Japanese yen and Australian dollar being most active. So, AUD JPY, AUD USD JPY, AUD USD, and SND USD. So these guys are more. So you now look, okay, Asia section is what I want to trade. And so it's part of your permutation. So we now go to the chart to check the validity. So very simple. Remember, I will say first of all, so let me take off all of those my instruments so it will not confuse you. Okay. So we say first of all, but I told you that you can be trading with 50 moving average. So that's another style of your trading. You are trading support and resistance. So you are going to trade with 50 moving average. So now let's go and your MACD. These two things are going to work for you. You are not depending on them to trade. You are using them as a confluence. So we first of all go on our daily time frame. And sometime if you want to do, you can do what we call a session break so that you can see which one is today and all of that. So you want to do session break, you can add session break into your market, meaning you right click on your page and all of that. Now, sometimes if I want to go more very critical, so if you look at it here, this is daily time frame. So if I want to go more critical, because at the time you're going to come in the day, this has not formed. This was the previous thing. So, but for me, I want to trade now. But this is not the currency I should be trading at this session of this record. This is by 2:30 p.m. West African time. So I'm not supposed to be trading this, but give and take, I'll use as an analysis. Now, I'll say if you want to do intraday trading, probably what you want to be using is 4-hour time frame. Now, what can you say is this trend now? So it looks more sideways, right? But let's look at it. We have a low here, all right? And then this was a high. So we have a low here. So this is a high, this is a low, and then another high, another low, another high. So this sounds so confusing, right? As if it's a sideways move because this is a low, it's a high, and all of those internal structure. Okay, no problem. So what should we do in this case? Now you're going to do this thing. Look at it. First step. Your first step is go this way. Mark all the relevant liquidity area. Remember, your strategy is support and resistance tie. So mark all the relevant liquidity area. These are liquidity area. Stretch it out because you are going to be trading from those areas. Now, you mark another one. Okay, so these are liquidity zone, which are support again and resistance. So this is another one. Okay, please pay attention to this thing I'm showing you. Very, very important. You can see this one is still in consonant. So I don't want to stretch myself so much. So let's quickly go to now 15 minutes. Now, when you go to your 15 minutes, exactly what are you looking for? You know, you have marked all of those areas, okay? What exactly are you looking for in 15 minutes? In 15 minutes, you are looking for, because as at the time you come, look at this is the day. Now, the market here, look at the liquidity. You know, I didn't stretch so much to grab them. Now, in your 15-minute time frame, ordinarily, this is a downtrend. Of course, you could see that. This is a high, this is a low, this is a high, this is a low. That is lower than this, I can't say. This is a high and this is a low. This is another high. This is another low, a high, low. So structure is being broken. You can see structure broken, structure. So as at that time you come in, market actually came down here. Now, what you want to find is that will the market actually get up to this point and grab liquidity and sell down or just break? So sometime just that 15 minutes is not as powerful as 1 hour on checking your premium and discount level. But now the market was rallying back up here. Something that will first come to your mind is to take your Fibonacci retracement and plot from the swing high to the swing low where the market returned from. And now I've plotted this, and actually this zone, from this zone to this point, is the area you're expecting that the market should start reacting. However, the market have an impulsive move up here. And what do we have here? Now, most time, another thing you may want to check, we haven't marked all of those points that are very, very important. Especially, we mark all these points in 4 hours. Another thing you may want to check that are very, very important as we mark all of those areas is that do we have any kind of imbalance in the market? If you have any kind of imbalance in the market, it's going to be very, very important for you to take note. All right. So now, so in that 15 minutes, that you have actually marked your Fibonacci retracement. I don't want to complicate this, but these are additional Confluences where you are trading support and resistance. You don't just say, okay, where do you get support from and where do you get resistance from? Because if you don't take care of all of these things, you are going to just be gambling. Oh my word. I sold my Bitcoin and then this market crashed massively like this. All right. So now here is this. Now, with your Fibonacci retracement, market pulling back massively. But what you had here was that this is at the golden ratio. All right. This is at premium, right? So market actually tap into the this is 61. So because from 50 to 61 is a golden ratio. Now market tap in here. And another reversal chances or point that you can have in the market is called what? Another resistance, is called multiple weeks. Now, this is a multiple weeks. And after the multiple weeks, we have a massive drop, which is an engulfing candle. Fine. Now, if you look at your MACD, which is going to form a confluence for you, it's already crossing down and with at least to a level. So that means I'm going to be finding a selling position here. Now, selling position, most time, I have my MACD specially made. My first take profit, if I say MACD is this, and the second one is this. It doesn't matter where it goes to. But at this point, your part of your rule for your effective profitable trading is that if I entered market, first, I want to look at the swing, right? So that means your first take profit should be here. But once you determine your first take profit here, so now let's go. You are going to take a short measurement, this. So after this point and whatever, then you're going to take, and then stop loss is actually above this point. So 1:2 is your target. Now, take note of this. Effective strategy in more profitable trading is that the question you ask yourself is that how many lots do I actually want to use? And what to determine how many lots you are going to use is that how much do I want to make today? So that will determine how much I can afford to lose today. Okay, I want to make $20 today. I'm just on a instance. Or I want to make $100 today. Okay, $100 is my target. That means you should be able to, you should get ready to afford to lose how much? You should afford to lose $50. So 1:2. So if I can afford to lose $50, okay, how many pips will make $50? And that will determine what's the lot size. So now, if you are trading, depending on what's your account like. So now, this is, how many pips is this now? 10 pips. It's not much, right? It's not much. Let's call it 10 pips. So 10 pips, if you can afford to lose $50 today, so we now divide that $50 into 5. So $50 into 5 is $10. So that means per trade or per position, I can afford to lose $10. So in that word, I can open, so this is 10 pips. So 10 pips times 5. So maybe at first I want to enter 3 position. I'm going to enter 3 position and perhaps use maybe 0. So 10 pips, if I'm using 0.0, so maximum stop loss you should have should be 30 pips. So 20 to 30 pips maximum. So let's say you are even going to go to this point. Now, 30 pips, if you use 0.05, let's take it that way. So 0.05 times 30 pips. So 0.05 in dollars is 50 cents. So that means $0.5 multiplied by 30. So that's $15. So that means if you are going to afford to lose $15 in a trade, that means the maximum number of trade you would take with use of 0.05 is 3, because that's $45. So 3. So if that's the case, but of which if you're scalping, this is like intraday. So that means 1 ratio, with this one is too long, right? Because to what extent do you want this one to move up that point? So let's take it up here or above 75 or 73 and all of that. So 1 ratio 2, let's drag to this point. Okay, 1 ratio 2 is here. So this is 1 ratio 2, with about 44 pips. So you are losing 22 point something pips to make 44 pips. So if you make 44 pips in this trade, how much is your money? So that means 0.5 times 44. That's about $22 on each, and you have 3 positions open. Now, why do you set this 3 position open? Because you are saying, so in case the market continue, you are looking at another point, maybe very far down. Perhaps we didn't even mark it. And now, when should I now add up this position? Number one, when the first stock take profit has been hit, or when the market has had another significant pullback, which was here. But this is the problem. You may not be able to be effective in doing this if you are trading too many instruments and too many markets at a time. That's what makes us fail. So if not, as at the time market clamped down here, because like here we have said, instead of entering 1 position with this also lot size, split it into 3 or 5. So if it's 10 pips, you can afford to lose. So if it's up to 5, 3 will first enter, and then the other one can come in. So at the end of the day, when the markets have taken and given you $22 times 2 here, that's $44. So, and entering here, and even if the market pull back to this point, will not disturb you. And that's exactly what you do. And then you can see these guys still continue. I'm sure US dollar now still getting more strengthened, right? That's going to be at about a 1 ratio 3 at this point. But do you actually plan to get to 1 ratio 3 when you start? No, because market just give you an allowance. And you can see your MACD continuing to still rally now. This is a pullback and continue. So support and resistance strategy work if you know how to add up necessary confluences. And now, those of you who are new in our ecosystem or our signal group, when you see me send a screenshot like this, take note. It shows that this is an entry, this is a stop loss, and where you see some line, I draw some line like this. I draw some line this way. See how I draw some line, right? This my orange line, I draw them like that, right? That's to tell you is the first take profit. Now listen, this is the rule of my signal. If you come in and the market has gone close to the first take profit, don't enter. Let the first take profit get finished. Pay attention on the group. Sometimes I'll say move stop loss, right? When I say move stop loss, then we are still saying the market continue and all of that. You will not want to find an entry at a pullback. Just take note that pullback is your entry point. This is intraday. For the fact that this one go too fast this way, does not mean it's going to happen like that all the time. Are we together? And so support and resistance, this is intraday. Now let's quickly go into the daily Of course, let me check my market. I can see gold crash completely. That's great. I want to check the market I was in. Quite unfortunate. And that's why I told a lot of people that when I'm going to be very busy, it's going to be difficult for a lot of people because I wouldn't have too much time for activities. Oh my word. Oh my word. And you can see our right. So let's go this way. Oh my word. Can you see? This is this support and resistance strategy. See the market. Come on. Come on. This is crazy, guys. All right. So look at gold. Now, you ask me, Felix, what did you do to gold? I actually didn't use 15 minutes. I used 5 minutes here. And I'm going to show you. Very simple. Now, this is what we said. We said gold looked good, right? To sell. Now, so what happened? When we came, so let's go, we went for either 1 hour or 4 hours to look at support and to look at liquidity areas, right? To look at liquidity areas. Sorry, just a moment. Just a moment. Okay. Now, so here I think I was explaining about gold. So if you want to know more detail about this top-down analysis and then key level setup, so there's a need for you to enroll in our academy. Now, quickly, when I came in and I was saying that gold has actually recorded some points of interest, right? And now the challenge is that we need to wait for it to create a new all-time high. But irrespective, so quickly let's look at it. If we go to 4 hours or let's go to 1 hour, probably that may give us some liquidity area, right? So I need to close some positions. So that's giving us some. So this is what we did. What I did was this. So the same way we've just seen that marks the key levels, or sorry, liquidity point. You know, we are doing support and resistance. Mark the liquidity point, so which we mark all of those relevant points, right? We mark all of those relevant points. These are liquidity points, right? So these are liquidity points. So these are liquidity point, right? And we mark the top here. So forget those paint, I painted those top there. We mark all of those top, we mark everywhere. Now, this is 1 hour. We now went back to 5 minutes. Now, in going back to 5 minutes, so what I did here was simple. Now, going back to 5 minutes, now market was moving this way, creating higher high. This is not a swing. This is a swing. Okay. This is a high. This is a low. And this is another high. And whichever way topped here is another low. And this is another high. This is another low. Here was supposed to even mark. So this is another low, right? And another high created, which is the highest right now, and then create another low here. Now, this low ought to be broken. Okay? This low ought to be broken before we take the business very seriously. Now, but this is another thing. So sometimes it became so choppy, moving sideways. Now, so I now say I could trade, I could as well be trading this, but this is what really happened. The market move up, of course, got rejected. So I now have to have a zone because of our what? Our support and resistance strategy. So the highest from the body of the candle to the high, which is the wick of the candle, are marked out. So once they are marked out, I want to see the market return and rejected, or return and sweep, whichever one, or not even touch, sign of weakness. And now it was doing all of this, and I was trading this. Okay, we actually traded this. And how should I trade it? Remember, you're using support and resistance. And this is gold. Gold has crazy volume. I stepped down to 1 minute. I stepped down to 1 minute. So 1 minute still now give me a gap of, but even in trading the 1 minute, we are careful because we knew that the market actually creating a lot of activities. Now, remember I said the lowest I marked where the market's supposed to get to and will continue to be crashing, I have to mark that. So as the market was getting there and then reacting, so what do? We took profit, right? So the market came down here and still rallied up. Even the 5 minute, I think I have what we call Felix hack. There's what we call Felix hack. So I use Felix hack to still trade it. How do I use Felix hack to trade this? Look at it, 5 minutes. So the market, right? We said this was the lowest, right? Right? Before the market returned up here. And where is it? Yeah, I think so. This guy. So now the market returned there, and which was a liquidity area, and sweep and return up again. This is another buy, and I think I shot this guy back. Now market pull back again. As long as this return remain here, that means we are still going to go down. And eventually, what happened? This was a stoppage. This one is firing. I need to stop some position because I was in profit. Some position. Close this one. And then trail the stop loss for this guy. That's all. Right? So now, what if you look at it now, what are we supposed to be waiting for? Because you have marked all this, it's not now you marked it. You want this guy to return back to this point and probably get rejected here. Now look at it. This is 5 minute though. Now it should be rejected here to sell more, or rejected here. Or look at one thing that is available here. Now there was an imbalance here. Look at it. So this imbalance has not been mitigated. You want gold to return and mitigate this imbalance. What is imbalance? Fair value gap. 3 candles make fair value gap. The first candle, the second candle, which is the middle, and the third candle. And of course, to be valid, you have to have a wick on the first candle and a wick on the third candle. And this imbalance. So if this candle return back up here now, it's going to what? Mitigate. And by the time it mitigates, it's now even in consonant with 50 moving average. Now, so you have so many things that may not make this guy get mitigated. The market can get up to this point, and because this is another a kind of resistance, so the market get up here and get stopped out, and that's another point which you can identify another fair value gap here. Look at it here. Look at it here. Right? That's another fair value gap. So it could mitigate this one and then continue to rally down. But whichever way it's doing, you have taken money on the table about 2-3 times on gold at a go. And so you can continue to trade your gold as long as you are just scalping and taking the money. And when it gives you massive money, you take it and all of that. But trying to juggle with gold, juggle with other, instruments and all of that, you will miss some good move on gold or other instruments you want to model together. Are you getting it now? So you can see gold now rallying out. This is already me, so we are going back to this point. And once it's rejected here, you have another massive sell point. So here you have made money, because the rule is this: if you don't do 1:2, so much will be collected from you. So it's better you have taken the profit and you return back to the market again and again. That gives you a lot of opportunity or buy and selling opportunity, as it were. I hope I'm not in the market here, because these are the things that normally happens to me, and then I wouldn't remember that I was in the market, right? So please take note of all these things I'm just showing you. Support and resistance is with strategy and effective confluence that will make you to be profitable in it. If not, you will just meander around the market and eventually have nothing to show for it. So you can see Bitcoin after the massive crash again. Now what happened? It come to sweep all this liquidity. It's a liquidity area, and then again wiped out. So if I'm trading Bitcoin now, you can see this is a liquidity sweep. Look at it. This line was stick there. And then after sweeping it, massive move up. You will have taken some profit here. Another liquidity was swept here and we fired down. And now it's going back again. That to sweep it and return back, or sweep and then break out and retest and continue. All right. So you don't need, because especially when the market refused to trend as it were, because there are no much volume, Bitcoin struggling and all the like. So ladies and gentlemen, that's the same way I traded Euro USD. And so every of your instrument, but limit your exposure to fewer instruments, and so that you can be more profitable than jumping and jogging around, except you are in a swing position and that have been running for a while. You want to add more position, and that's one of the important strategy you must employ. All right. So when I send a signal and you see the way I map it, so entry, like this is an entry, this is stop loss. And now, so imagine somebody who was in here, the market still came down to this point. So for a new person who's coming, so that, okay, and I didn't see anything exit and all of that, and you just came and market was here, and you didn't see on the group and say, oh, market is invalidated, then that become a discount for you to add position, or enter your position and find your own take profit, even at the same places we put. First take profit now is done. We're waiting for the second one. Imagine the massive dump before again market rallied up, probably to go back to the second take profit. Okay, so that's it. So when you see on our group, when I send any kind of screenshot that way, it's a signal. So I don't type a number this, because sometimes specifically you type and then you are limited by those things. Does that make sense? All right, you have a nice time. Bye bye.